Good morning, everyone. Welcome to Monday morning. It's Stephen Whiteside here from theuptrend.com. In the pre-market this morning, things are pretty positive. We've got stock index futures up across the board. We've got Bitcoin higher. We've got gold up $7. The only thing that's down at the moment is the price of crude oil, which is down 75 cents at the moment. Now, we have no major economic numbers coming out today. All the activity this week is going to be focused on the Fed meeting and the Fed announcement on Wednesday. And we do have a bunch of earnings coming out starting on Wednesday, Thursday, and Friday. So that's when volatility should expand. Speaking of volatility, the VIR index is still on a sell signal, so that is supportive for higher stock prices. You can see traders were a bit squeamish last week, but not enough to give us a new buy signal. That would happen on Monday with a close above 1434. Now, we'll start off this morning taking a look at currencies. The US dollar index was back on a buy signal last week, and it wasn't necessarily on the back of a lower euro. The rest of the major currencies fell in line and moved lower, with the Australian dollar moving down. The British pound is back on a sell signal as of Friday's close, joining the Canadian dollar, making a new low on Friday. There's the Japanese yen falling. The Mexican peso was pretty steady last week, unlike the Swiss franc, which rolled over on Thursday, and we saw some fall through to the downside on Friday, trying to hold the lows from November. Moving on to the bond market, bonds moved down last week and bond yields moved up. So they're trying to get ahead of the Fed, I guess. We'll have to see what happens. But there's the TLT selling off last week. There's the XBB back on a sell signal as of Friday's close, joining the emerging markets, and the junk bonds all selling off sharply over the past couple of days. So I assume that bond traders are trying to get ahead of the Fed, but we'll just have to wait and see. Now, looking at commodity futures, starting off with crude oil, we're on a buy signal right now, and we're trying to break out above 71.88. That might help turn around the energy sector, which has been falling on both sides of the border. And then we've got natural gas having an inside day on Friday, still on a buy signal here. Lots of resistance up at the 293 level. If we can take that out on a closing basis, we should be able to get up to 313. And if you look back to the October trading, you can see that we traded up towards the 313 level. So that could be doable. Then looking at the price of copper, it rolled over on Friday. It's still on a buy signal, no change in trend. We had gold down on Friday, no change in trend. Platinum still on a sell signal, making a new low on Friday. And we had silver rollover. It is back on a sell signal as of Friday's close. Looking at some other commodities, we had cocoa make a new high on Friday. We still have coffee on a buy signal. It's traded into the channel for the last 3 days, but no change in trend. Then we've got lumber selling off, and we'll take a look at the home builders in a minute. They're also selling off at the present time. Next up, let's take a look at the major index ETFs, and we'll start off with the Dow. The Dow is not a major index anymore. It's the oldest index. It's the one that everybody knows about, but it really isn't that important anymore. I include it as a courtesy. It is going to be the index that they're going to quote when you're listening to the news on the radio in the car, or if you see a general news program on TV, it's going to talk about the Dow. What didn't work on the Dow on Friday, it was NVIDIA, down 2.25%, followed by Disney, followed by Amgen. So certainly no change in trend there. Now, the Dow, of course, is the oldest. And when I was younger, much younger, when I first got started in the business, if you had have listened to the news, they would have quoted what the Dow did, what the transports were doing, and what the utilities were doing. Those were the three oldest indexes out there, and they're the ones that the media would quote the most. When I got started trading, it wasn't the S&P 500 that people were trading, and when we look at the SPY, we need to close on Monday below $602.86 to give us a sell signal. It was the S&P 100 index was the big index of the day, and it was not futures contracts people were trading. It was the OEX options. That was the big thing people were trading back in the day. Now, the equal-weighted S&P 500 looks much different than the S&P 500, which is being held up by those big cap tech stocks. When we look at the overall market from Friday, on the S&P 500, there was 160 stocks up, There were 6 unchanged, and 335 were down on the day, and you can see that in the equal weighted S&P 500. What worked? Well, Broadcom certainly held up. The S&P 500 was up just under 25% on the day. So congratulations to anyone who was long Broadcom. What didn't work? Airbnb didn't work. Nucor did not work on Friday, and neither did CoStar. Those were the big losers on the day. Now, Supermicro was a big loser on Friday. It was down 3.9%, so just under 4% on the day. Now, this trade worked out perfectly. I didn't take it because there was too much risk involved, but we knew that our target was the flypaper channel, and we wanted to fill that open gap, and so it all worked out as planned. But again, I didn't take it. I waved it off because they've got accounting problems, and they're just one press release away from disaster. Now, we can see that the market liked Supermicro up until the start of July. And once it started falling through the flypaper channel, it went from being a good stock to a bad stock. Now, if the whole chip sector had have done this, then, we wouldn't have been picking on Supermicro. But the whole chip sector did not do that, did not start to break down in July and start to continue to make lower highs and lower lows. So the trade was up to the flypaper channel, and that's what happened. Now, we talk about good things happening to good stocks and bad things happening to bad stocks. So we can agree that up until Friday, Supermicro was a bad stock. And so what's going on now? Well, it's getting kicked out of the NASDAQ 100 in a couple of days, and it is down over 13% in the pre-market this morning. So, hopefully you took money off the table on the way up and locked in some profits. Otherwise, you're out 13% coming into the open on Monday. Now, the thought of woulda, coulda, shoulda certainly comes up when you look at something like this, but that's part of being in the stock market. It's like being in a casino. When you walk around a casino, you hear all these machines going off and people winning, and it's not you. Well, that's just to make you feel uncomfortable. And when you look at a trade like this that you missed and I missed, it's supposed to make you feel uncomfortable, and that's exactly what happens. And your job is to ignore it because on every single day you are going to miss tremendous opportunities that the rest of the market also missed. So, don't ever kick yourself or be concerned about the trades you missed. You have to manage the trades you take. That's your responsibility. What everybody else is doing is nothing to do with you and nothing to do with me. Looking at the rest of what happened on Friday, you can see the Russell 2000 was down. We had small caps down. We had micro caps down. So the underpinnings of the market are still fairly weak, but the generals are still leading the charge, and that's what the world is focused on. Now, there's the Magnificent Seven ETF. It's holding up fairly well on Friday, just down a nickel on the day. Unlike some of the other sectors, we've got home builders down. We've got some selling in the financials. We've got healthcare, biotechs, pharmaceuticals all selling off on Friday. And there's the materials. So anything that's in the ground is not doing well at the moment. And when you look at this particular ETF, you can see the double top up here, and then a lower high, lower low, and wow, look at this, a lower low, trying to hold the lows from back in September. So that'll be quite a tell if we crash through those September lows for the materials sector. Now, moving on to the Canadian market, and we're on a sell signal for the Vanguard Canada ETF and the iShares for the TSX 60. Both generated sell signals on Thursday and saw a fall through to the downside on Friday. We've got small caps on its second day of a sell signal as well. Microcaps, we've got the Venture Exchange back on a sell signal, but it looks like investors are not that worried about the microcap stocks at the moment. Now, the energy stocks made a new low on Friday before recovering, just closing down a penny on the day. We've got financials rolling over. They're back on a sell signal as of Friday's close. Bank stocks still holding up, though. And then we've got gold stocks back on a sell signal as of Friday's close. It's also a midterm sell signal as well. And we're stuck in the flypaper channel right now and looking to see if we can find some footing in the flypaper channel. If not, you can see a move down to $21 would take us back down to the 200-day moving average. And that'll be quite a tell to see if the market can hold that 200-day moving average if we continue to move lower from here. Now, we're projecting down to the 200-day moving average and a bounce. Of course, there's no guarantee that that will happen. What didn't work on Friday? Well, Cameco was the big loser. Down on the day, we saw Kinross roll over. It is back on a sell signal as of Friday's close. And then we've got Teck moving lower, and it's starting to trade below the November lows. We haven't closed below those lows just yet. Now, on the TSX Composite, Edgehouse was the big loser of the day. It was down nearly 13%. Now, if you were trading this stock, if you go back to when the trade started and looked up, I would have sold 50% at 31.25, put in another order up there at not 32.03, but at 31.99. I would have sold another 50% of the remainder of my position. So now I'm just down to 25%. And we did hit the 32.03 level. We got as high as 32.09. So you have no excuse not to get orders filled up at that level. And then here we are crashing. And so I'm going to have to, if I was trading Edgehouse, I'd have to get out at the open on Monday, and certainly a significant loss from the first trade. But I've got rid of 75% of my shares at a profit. So that's going to help buffer that big down move from Friday. Okay, folks, that is all for this morning's presentation. So far, it looks like the market wants to open higher. Have a great day. Next time you'll hear my voices on Tuesday morning, and that time we'll walk through the most actively traded stocks from Monday's trading action.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.